All right, today we're talking about dollar cost averaging. Should you or shouldn't you? So investors have gone back and forth on this for years. The idea is simple. You buy a stock or an ETF, a mutual fund, some kind of investment, and then you consistently add to it, averaging in the number of dollars that you have contributed. The idea being that when the product that you've invested in sells off, technically your dollars would be buying more. As the value goes up, your dollars would be buying less, but your average cost would be slowly dragging behind. So the argument sometimes is, well, that's a recipe for disaster. If you're constantly buying on the way down, what happens if it never bounces, right? You better be very sure of the investment that you have. So that's what we're trying to solve here. Is this something that you should be doing or considering, or should you run for the hills and just quit messing around with this? So the answer really depends on the type of investor that you are. If you're a passive investor, meaning someone that checks in once a month, once a quarter, maybe twice a year, maybe, then okay, that's probably for you. You set aside a certain dollar amount every month that you contribute to your IRAs or Roth IRAs, whatever you have. And over time, yes, the products that you choose, you'll build positions over time. Your average cost will be nice and sweet. And of course, you'll ride the moves up and you'll be buying cheaper on the way down. Makes sense. For passive investors, I have no problem with this. I think you should 100% be finding the best 5, 6, 7 products for your portfolio and then just keep committing to it over and over again. You'll be really shocked how the money adds up. Now, the people that get in trouble with this, I've been there, I've done the same thing, if I'm honest with you. The people that get in trouble are the short-term traders or the day traders. You guys, me too, just stay away from dollar cost averaging. It does not work. I can tell you from experience. Here's the idea. You buy a stock, maybe you think you're gonna day trade it. Maybe you think you're gonna hold it for a week. It falls a little bit. You go, all right, no problem. I'll buy a little more and then my average cost will come down. It falls a little bit more and you go, oh man, why? I don't wanna have a position this big, but I gotta add some more now and bring my cost down. What happens? The losses, your P&L, the profit and loss column on your account starts going bigger and bigger. Have I touched a nerve yet, right? Ooh, I'm like getting hot just thinking about it. I've been there. More times than not, by the way. You know, you think you would learn after the first time, but a couple weeks, couple months later, you do the same thing again. Anyways, this is where you get into real trouble because what should have been just a simple little position that either won or lost, no big deal, turns into something that you're buying on the way down, but your average cost now is up here. You can't even see my hand, right? So the more you buy, yeah, you're bringing your average cost, but not enough. It gets harder and harder to keep up. So day traders, 100% do not do it. I don't have anything nice to say about that, actually. Short-term traders, don't mess around with this, right? Have some kind of a stop loss. Buy a stock, and if it doesn't do what you think it does, of course, get out. So what's the big deal? Why can't day traders dollar cost average just a lot faster, or short-term investors do the same thing? Well, it comes down to time and money. See, if you're a day trader, then you are using margin. And if you're using margin, we did another video on this, where we're talking about the brokerage firm actually having an interest in your day trades. They can require that you keep a certain amount of money in your account or keep a certain amount of equity relative to the position that you have. I know it's complicated, we won't talk about that now, but basically the brokerage firm gets a say in what you do with your account. So if you're adding and adding and adding and you're starting to use brokerage firm money, all of a sudden they're gonna go, whoa, 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 you need to reduce the size of this position or we'll do it for you. They'll always do it at the worst possible moment when you have the biggest loss, and the loss is your responsibility, not theirs. So for day traders, you have a limited amount of time and you have a limited amount of capital, but remember some of that is margin and can be very dangerous. For short-term traders, this is where people take a 1-week assumption. They say, maybe I'll just buy it and by Friday it'll be higher or something. And it turns into a 1, 2, 5-year investment because you can't get out of it. Think of the stress that you would be under for a year while you wait for a stock to climb back up to your cost. It's not worth it. It ruins lives, families, and everything in between. So to wrap it up, the long-term passive investors that are not using margin, that just have their own money and are choosing good quality ETFs, mutual funds, or stocks, no problem, right? Great idea, dollar cost average, keep your money going into the stock. Day traders and short-term investors, don't even ask, don't leave a comment, I don't want to hear about it. It's bringing up bad memories here. I'm getting red, I've got goosebumps thinking about all the bad times I did it. Learn from me, I'm losing my hair because of these things. Stop it. Well, hey, if you have more questions, feel free to leave a comment. At jazzwealth.com, we manage retirement investments, so we don't do all that messy day trading stuff, and we don't use margins. So we can help you with your IRAs, your Roth IRAs, and make sure that you're in the right products for the long term. So if you're interested, go to jazzwealth.com, go to the top, click Invest Now, and I will personally follow up with you to open or transfer your accounts from wherever they may be. If you agree or disagree or just want to talk a little bit more, send me an email, or you can contact me anytime directly at